Hello again, everyone. Welcome back. In this technical analysis of the stock market video, I call it Not There Yet, because even though we had some pretty intensive selling on Friday and for the week, I just don't think we have an intermediate bottom, and we've got a little more work to do before we find something to that effect. This week, I'm going to focus on the S&P 500. First, we're going to look at a side-by-side view of what happened for the month of April, which is pretty negative for the Dow, the S&P, and the Nasdaq. Then we're going to take a further look at the daily, weekly of the S&P, the Elliott Wave picture on the S&P. Take a look at the net high lows on the New York, and take a look at the high yield bond fund. What is it telling us? TLT, long-term Treasury bonds, and the 10-year yield. And then XLF and the banks. Why are the financials continuing to sell off when interest rates are going up? Kind of an interesting situation that we've got here. And then, of course, we've got the Fed meeting this coming Tuesday, Wednesday, and we're going to get a big announcement from them on Wednesday. All right, let's start off here with the monthly chart. The Dow was down 1,700 points for the month of April, 4.9%. S&P 500 down 398, 8.8%. And the Nasdaq Composite was down 1,886, 13.3%. And this was the biggest percentage loss on the Nasdaq for a month since October of 2008. Now, it's going to be really interesting. I've seen a lot of comparisons to 2008. Here was an interesting one that I saw here just the other day. Second time since 1996 that equity mutual funds and ETFs saw outflows of more than $20 billion in back-to-back weeks. And of course, this was talking about the previous week, okay, because this came out on April 27th. So he's saying we hadn't seen any other time like that since October of 2008. So again, here's that October 2008 period. All right, so let's go back and take a look at the S&P 500. Okay, here's the SPX for daily and weekly. Friday, we lost 155 points, and it came really, really close to taking out that February low, but we just didn't quite do it. Now, the Nasdaq did. I believe the Russell 2000 did also, but the S&P was kind of lagging behind. The Dow was a little bit further behind the S&P. On a weekly basis, down almost 140 points for the week, but you can see, you know, we've had 4 strong weeks in a row. Of course, that's what gave the kind of very negative month that we had. When we look at the Elliott Wave picture, here's what I'm counting. Let's take a look at the daily first. So I think we've had minor wave 1. I'm calling it minor wave 1 for right now, and minor wave 2 back up. And we're working our way down to minor wave 3. This is definitely starting to act like a third wave, although we got this kind of free fall price action in the third wave over here of minor 1, but we're starting to get it now. I think that we are in the third of a third, and when you get yourself in that kind of situation, that's usually when you have some pretty dramatic moves to the downside and a lot of gapping to the downside. So we'll see what kind of continuation do we get this coming week. But that is the picture there. Let's take a look at, go back over to the weekly for a minute. Now, when I look at this and I say, okay, if this is the 5-wave move, here's a path forward. This may morph into something else. Maybe it morphs into a leading diagonal, but right now my assumption is that it's going to be a pure impulsive wave structure to the downside. And if that is the case, a normal length wave 3 would push down here to 34.98. which is about 350 on the SPY. So it's going to be real interesting to see, do we get a normal length wave 3? Do we get an extended wave 3? Or do we get one that's even a little bit shorter than a normal length? But right now, this is a little target I've got in mind, but of course, what are we doing? We're watching the wave structure within the third wave, because you need to see 5 clear impulsive waves within a third wave. And of course, the third wave can never be the shortest wave of the 3 motive waves that you have, 1, 3, and 5. Okay, so that's the picture, the Elliott Wave picture to the downside that we're looking at. And yeah, we had a big move to the downside on Friday. You know, we had the down volume as a percent of the total of up and down volume was down 90% on Friday. So pretty dramatic move. Still haven't seen a 90% negative breadth day. We've gotten close, but we just haven't seen one of those kind of days, so we're watching for that also. Now, if we go take a look at the high-low index, let's take a look at this. This is on the New York. So here we got down into the minus 580 area this last week. We bounced up, which was kind of interesting. We bounced up here, even though we had that really negative day on Friday. But you can see the lows that we had, in January into February into March. We haven't gotten back down in that territory, much less have we gotten any kind of extreme like March of 2020. Okay, so, yeah, we're getting some selling right now, but it's not even as extreme as what we had in January, February, I don't believe. And so we'll see if this starts to continue. The Nasdaq was a little bit worse, but that is the picture there coming off the New York. All right, I want to and talk about looking for capitulation, looking for different signs of capitulation. There's a lot of indicators we look at every day. But here's an interesting quote on capitulation I saw today by Tommy Horton. Retail is not capitulated. When a failed fund manager down 70% goes on CNBC and attends a crypto conference with Bitcoin down 32% and people still believe in her, retail is not capitulated. So he doesn't call out and say who it is. You can kind of guess who that might be, but pretty interesting perspective on retail capitulation. You know what? It may really take quite a bit to get a strong intermediate bottom in here after 13 years of a bull market. So we'll see how this unfolds. Okay, so let's take a look at the high yield bond fund. What is it telling us? Let's just go to the moving average view. Here's the daily chart. This just continues to look really, really negative, down 98 cents on Friday. So, we get these little bounces in between. You think, okay, well, is it trying to, it gets a little rally. Is it going to turn? And no, it doesn't turn. And when you look at the weekly, here's the picture on the weekly, and it just closed at the lowest weekly close since back, what was the close right here? It's 78.68, close lower than that. You got to go to week of April 19th, 2020. Okay, let's take a look at TLT. I just realized I was showing some data over here. My data provider doesn't fill in. Once we're into the weekend, it's like it's looking for data from the previous day, and there is no trading today or anything like that. So it's like I just have to move this over instead of showing it in here. But this is the picture I've got on TLT. This is a weekly view. I now believe that this is some kind of leading diagonal pattern to the downside for primary wave 1. And yeah, we're breaking down out of this little pattern that we've got. And I think we have a little bit more to come. I've just been looking for this fifth minor wave to kind of finish off, and we're just not getting it. But we're getting close. So that would imply that we have a little bit more to go to the upside in the interest rates. So we'll see if that happens or not, okay? So when we go over and take a look at 10-year yield, what is it doing? I want to go to the moving average view right here. This is the weekly. It's sitting at 2.89% on the 10-year yield. And yeah, we're just, for 2 weeks in a row, we've closed above that long-term trend line in here. It's like it's trying to push higher, trying to push above it. I mean, this is not the longest. The longest one I've got is on the dollar index, goes back into the 70s, but this one goes back to 1999, and of course this high here in early 2000. So it's a definite trend. We're definitely punching slightly above it. It'll be really, really interesting to see what kind of follow through do we get, especially after this first Fed meeting in May. Okay, so that is the picture there on the 10-year yield. I want to take a look at XLF next. Okay, here's a weekly chart of XLF, and look, this was down $1.66 for the week, and look at the kind of drop that it's been having. What, 1, 2, 3, 4, 5 weeks in a row. After that 2-week rally, they've just hammered this since mid-March. Pretty dramatic move. This is the lowest close since back over here. A little over a year ago, March of last year, but it's kind of surprising, really, and makes you wonder is this really telling us something else, in terms of about the economy, etc., with the banks? So, when you look at this picture, we'll see what kind of reaction we get here with the Fed and the decision that they make and what their outlook is and what they tell us their path forward is going to be. We'll see. Let's take a look at one of the banks in here, a big bank I follow, JP Morgan. When I look at the weekly chart of JP Morgan, look how this has come down. And, I had this support line drawn in here because it had gotten support in January of 2021, and right here, and what is this week? The week of March 6th of this year. And then we closed below it, snapped back above it, and now we're back down below this. And then here we got this gap that's just begging to be closed down here. This was a gap that was made at the end in November of 2020. We're talking about a gap between 105 and 110. It's going to be really interesting to see how quickly does this close this gap. Now, I would not be surprised at all to see it close the gap. It's just a question of how fast. Okay, so that is the picture there, JP Morgan and XLF. That's it for this weekend. We got a lot going on, a lot coming up. We had a lot of earnings this last week. Everybody's well aware of what happened with all the FANG stocks and the big tech stocks, of course. If you felt like the video was helpful, give it a thumbs up. And if you're not a subscriber to this channel, hit that little subscriber button. And if you'd like more of this kind of information on a regular basis, head on over to joehenches.net. Check out the website, check out the membership. Everyone, great week. We'll talk to you on the next video.